Mindsetters, welcome to today's Grade 12 Accounting Show. Today we have a special revision lesson on cost accounting and budgets. We have selected highlights from lessons shown earlier in the term to help you revise this term's work. So please post your comments and your questions on our Facebook page or on Twitter @LearnExtra so we can help you with your revision. You can also download the show notes for today's lesson from learn.mindset.co.za or click on the link on our Facebook page. Now it's time to get on with today's lesson.
Okay, let's take a look at a question which is adapted from the November 2012 Department of Education. Do you like chocolate, Tara?
I love chocolate.
Well, great, because this question is about Cape chocolates.
I'm listening.
Okay, so we're provided with information relating to Cape Chocolates, which I'm guessing is a chocolate manufacturer, and it's for the financial year that's ended 30th of June 2012. And this business is owned by someone called Mary Muller. And what we're required to do in this question is we're required to prepare the following for the year ended 30th of June 2012. So the end of this business's financial year, we're required to prepare some things for them. And we have to do, first of all, the factory overhead note to the production cost statement for 20 marks. And then we have to do the production cost statement itself. And they're asking you not to do the notes to the production cost statement. They've only asked for that first note on factory overheads. But they say this important instruction, where notes are not required, show calculations in brackets. That's very important because the examiner is going to check to see that you get part of the calculation right even if you make a mistake, and you'll need to make sure that you get those part marks by opening up a bracket and doing the calculation of any relevant item. So make sure you understand how to indicate the calculations in brackets. So what I'd suggest that you do, these are two separate questions. They're 1.1 and 1.2. What I would suggest that you do is when you're reading the information, answer the two questions at the same time, because you're sometimes going to come across some information that needs to go in the note, and you're also sometimes going to come across some information that needs to go in the production cost statement itself. So if I were you, I would look and see what they give you in the answer sheet first, prepare the format, and then insert the information as you find it. So let's take a look at the information that we've been given. So, first of all, it tells us that there are various stock balances. And they've given us the three important stock balances that we have. We've got, first of all, our direct or raw material stock, and we have it for 2 years. We have it at the beginning of the financial year, which is the 1st of July, 2011, and we also have it at the end of the financial year, which is the 30th of June, 2012. So what's happening in this example, we've got some raw materials at the beginning of the year of 18,000, and we've got some raw materials at the end of the year of 20,000. They've given us the same for work in progress, but there's a question mark that we're going to have to calculate. So when you see there's a question mark, that's usually an indication that we're going to have to work backwards somewhere in our production cost statement. And then finally, we've got our indirect material stock at the beginning and at the end of the year. It's very important that you know where these items go. Think to yourself, should they go in the note, which remember is the factory overheads note, or should they go in the main production cost statement? So if we look at our answer sheet here, here's the section on factory overheads, and you can see it is completely and utterly blank. That sometimes causes people panic because they think, oh my goodness, I've got to fill everything in. Don't panic when you see that. The examiner is testing that you know the format of your factory overheads note and that you'll be able to indicate what has to go in there. And you should know that we usually start with indirect material, which I'm just going to write in as a starter, and also we start with indirect labor. So to know what indirect material is, you would have had to have answered the challenge question, but indirect material we can usually get from the information we've been given. And here they've told us what the indirect material was at the beginning of the year, and they've told us what the indirect material was at the end of the year. So your rule for the production cost statement is usually, when they give you your stock balances, you're always going to add your beginning figure somewhere, and you're going to subtract your end figure somewhere to work out what you have used. So the way I'm going to start it off, I'm going to take this 7,200 as indirect material, and I'll open the bracket up, and we're going to include it in here. Then we're going to add any indirect material that was purchased during the year. I haven't got to that section of the question yet, but I know I'm going to add what I purchased this year. And at the end, I'm going to subtract what was left over. So I'm really going to do that now because I'm reading that information point already. So this 7,500 at the end of the year was left over, and that is the amount that I'm going to have to subtract. But there's a number in the middle that's missing, which we're going to find shortly. We have to read some additional information first. Before the break, we discussed some of the things that were necessary for production cost statement and cost accounting, and we're busy working through a question here right now. And we've been asked to do the production cost statement, and again, our answer sheet is entirely blank. So when we see an answer sheet like that that's blank, what's important is that we should write down, just as a starter, all of the different things that we know must go into that production cost statement. I'm sure you know this format well, but see if you remember what I need to include in here. The first thing we need is to include our direct materials. So let's write that there. Our first item is direct material cost. Our second item is what we call direct labor cost. And if we add those two together, we get a little subheading. If you add the direct material plus the direct labor, we get a little subtotal called your prime costs, and sometimes you will also see it referred to as primary costs. Those are really the key costs that are needed for manufacturing on its own. But now we've got another section which is called our factory overheads. And the factory overheads are going to be the figure that we get from the bottom of this note. So we're doing the factory overheads note, and whatever answer we get when we've calculated our factory overheads, what we're going to do is we're going to take it from there and put it straight into our factory overheads figure. So that would be a note. We haven't been asked to do any of the other notes to the production cost statement, but sometimes there's a direct material cost note as well. Sometimes there's a direct labor cost note. It depends on the format that you're given, but you'll need to know how to deal with different ways of doing accounting and different formats. So after the factory overheads, it's important to remember that there's work in progress, and we take our work in progress at the beginning of the year. So I'm just going to write beginning of year. You can write beginning of year, or if you know the date, you can write that in as well. Then there's a little subtotal here which doesn't have any name. It's just something that you use to work out. And then we have the work in progress at the end of the year. And once we've done all of that, that finally gives us our total cost of production. So the format is very important, and you need to understand it. Be very clear that you've studied this well, that you know what goes in here. And now that we've written these items in, we can look back at the question and see what's been given to us. You'll remember that they've given us here our work in process or work in progress stock at the beginning of the year. Remember, you might sometimes see it spelled like this: work in process. It usually has three names. It can be called work in process, it can be called work in progress, and sometimes they also call it the production account. So if you see any of those three names, just be aware that that deals with work in progress or work in process. So this 35,000 was the balance on work in process at the beginning of the year. So I'm going to take it and put it in its right place, which is the work in progress at the beginning, and that was 35,000 Rand at the beginning of the year. At the end of the year, we don't have an answer. There's a question mark over there. So what we know is that we're going to have to work that figure out. But it's very important to understand that in your format, the work in process at the end is always negative, because those are unfinished products. They are not products that are included in this year's production. So I'm just going to put the brackets here to remind me that whatever this missing answer turns out to be, I'm going to have to subtract to get my final answer as the total cost of production. Be sure you know where the brackets are. The brackets are very, very important. Then there's one more thing that we can fill in from the first information point. You can see over here, I've got my direct material cost. Once again, it's always the same principle. When you're dealing with your raw materials, your work in progress, or your finished goods, what you always do is you add your balance at the beginning and you subtract your balance at the end. So I'm going to do exactly the same as what I did in the factory overhead note. Take my balance at the beginning, write it at the front, take my balance at the end, write it at the end, and then do other calculations in the middle. So if I go back over here, I've been given my direct material stock at the beginning of the year was 18,000 Rand. So let's fill it in. Beginning of the year, 18,000 Rand. And I'm going to subtract the balance at the end of the year, which in this question was this 20,000 Rand over here. So let's subtract 20,000. So I started the year basically with 18,000 Rands worth of raw materials. I transferred them to the factory, and then there were 20,000 left at the end of the year. So during the year, I purchased some more, but we're going to see that when we look at the set of adjustments.
Okay guys, I hope you're enjoying this revision session. If you are struggling and need help, please post on the page or send your questions to the Learn Extra Help Desk. The links are on our Facebook page. But now it's time to take a very quick break. Don't go away, we'll be right back. Welcome back from the break, guys. Doing revision is really important, so I hope you are enjoying this lesson. I'd love to chat to you on our Facebook page or on Twitter, so please let us know how you are doing. Enough of the chat, now it's time to get back to some more revision.
So let's now look at the second adjustment. We've actually dealt with all of these figures. We've used actually every figure that we have, except the question mark, which we still have to calculate. So now let's look at the transactions that happened during the year. First transaction deals with raw materials. So we know that raw materials are actually going to go in the section on direct material costs on the face of your production cost statement. And it says that we purchased some raw materials during the year, and we purchased them at a price of 650,000 Rand. So if we purchased raw materials, they have to be added to our stock of raw materials. It's obvious, it's logical. So I will go to my note, which is the direct material cost, and I will add 650,000 Rand, because those were my purchases of raw materials for the year. If I then go back, I will see the second point. It says that there were some raw materials not ordered, and they were returned to the supplier for 35,000 Rand. So if I returned raw materials to the supplier, guess what? I didn't buy them in the end because I've returned them. So that 35,000 needs to have been subtracted. So I will go back to my production cost statement, and I'm going to subtract 35,000 Rands worth of raw materials. Have to write very small in these notes sometimes. And then there's some more information that they've given us. They've told us that there is some cost of transportation of raw material. So remember, cost of transportation mindset is, I'm sure you remember it from your grade 10 accounting. Whenever we speak about cost of transportation, that's what we call carriage. Remember, carriage on purchases or carriage on sales. So this carriage on purchases is the cost of transportation of the raw material. It must come into our business. It's come at a cost of an additional 12,300 Rand. Remember, when we're dealing with cost accounting, we need to include all of the costs that are necessary to get those raw materials to our factory. They are going to be included in the costs of the raw material. So that 12,300 Rand must be included as an additional purchasing expense to buy those raw materials. So I'm going to add that 12,300, I'm going to add here as well. So my calculation has ended up being quite long, but it's 18,000 plus 650,000 minus 35,000 minus 20,000, and then plus 12,300. Those would be my costs of the raw materials. I'll see if there's any further information that I need to consider, but we'll work out what the answer is in a few minutes. If we then go back to our page, it now tells us more information. This is now no longer dealing with raw materials. It's B instead of A. And it tells us that factory rent that we paid came to a total of 68,500 rand. Think to yourself, where does factory rent go? I always see these questions, these production cost statement questions, I see them as puzzles where I get a whole lot of different numbers and I have to take them and put them in the right place and sometimes do some working out with some of the numbers. So this figure here of 68,500, that relates to factory rent, and what we need to be very clear on is that factory rent goes in a section called factory overheads. Remember, I asked you earlier what factory overheads are. Factory overheads are all costs to do with the factory, and only costs to do with the factory. So we're not going to put in anything for the office, we're not going to put in anything for the shop, we're not going to put in anything that is not a cost related to the factory. So what you need to know is that we have to put in here, there's lots of lines open, we need to put in any cost that is involved in the factory, and our first one is going to be our factory rent. They've given it to us. There's no calculation that needs to be done. All we're going to do is take the 68,500 and put it directly into our rent amount. 68,500 rand. Easy one. They've actually given you the answer. You don't need to calculate anything. Now let's see what else they say. Another transaction was, or our next transaction, was that advertising that we paid was 23,500 rand. Tara, do you think a factory needs to advertise?
Most definitely. That's how they get their products and what they do across to the public.
Very true. And that advertising would be included as a cost to the business. To any manufacturing business, it would need to have some type of advertising. But the key thing is that advertising does not take place in the factory. Advertising is going to take place somewhere else. We're not going to put up advertisements in our factory because no one's going to come inside and see them, right? So even though our manufacturing cost is going to include advertising, that advertising is regarded as a selling expense. We advertise to try to sell our product. We don't advertise while we're producing it. So the good news is that this one you can completely ignore. We're not going to put that advertising anywhere in our production cost statement because remember, our factory overheads is only costs that have to do with our factory. Any costs in the office, any costs in selling are not included. So you can actually just smile and ignore that one and carry on to part D. Okay, part D is a little bit more challenging. It says factory maintenance paid was 46,700 rand. Repairs to the amount of 1,300 were completed in June, but will only be paid in July 2012. So this is factory maintenance. You know what maintenance is. A factory's got many machines, it's got equipment, it's got vehicles, it's got all sorts of things that run and help you manufacture the finished product. But these items are going to develop wear and tear, they're going to need to be maintained, they're going to need to be repaired. So these two items are very definitely factory overheads. They are costs to the factory, they're necessary to keep our factory running. And here's a small little adjustment, that there is an amount of 1,300 rand which was completed in June but will only be paid in July 2012. So remember, this is one of those adjustments where we're looking at the end of our year. We've been asked to do the production cost statement for the 30th of June 2012. And I'm sure some of you have got bells ringing in your heads to let you know that this was an accrued expense. It's money that we still have to pay in July, but the work was done in June. So that amount of 1,300 rand, which will only be paid in July, doesn't matter when it was paid, we're going to include it in June's expenses because the work was done in June. The machine broke down in June, so it was a cost in this year's production cost statement, not in next year's. So if we want to show repairs and maintenance in our production cost statement, let's show it as our next item. We need to include repairs and maintenance. And we are going to show both items actually, because the first item was for this year, this 46,700 Rand was the maintenance for this year, and the second item of 1,300 was also for this year. So we're just going to add the two together, and our answer is going to be 46,700, which is the amount we've already paid, plus the 1,300 to get the answer. Please note that we've got two separate items here, repairs and maintenance. You can, if you want to, show them as two separate things. You can show maintenance as one item and repairs as one item. You won't be penalized for that, but usually a factory would put repairs and maintenance together as a single cost item. Okay, let's have a look at our next transaction. Our next transaction says water and electricity paid was 80,000 Rand. And now here they're telling us this amount is to be split between the factory, 70%, and the office, 30%. What did we say earlier about our factory overheads note to the production cost statement? We said we're only including the factory expenses. We're not including anything to do with the office. We're not including anything with selling. So what we need to realize is that this 30% belonging to the office, we're going to ignore because that's going to go in the statement of income for the business. It's not going to go in the production cost statement. So all we need to calculate is how much is this 70% of the 80,000 that was paid for water and electricity. So the way we're going to do it is we're going to write an item water and electricity, and we're going to do the calculation. It was 80,000 Rand, but we're only going to work out 70% of it because the remaining 30% was, as we've said before, an office expense. So let's do that and see what needs to happen. It was 80,000 Rand, and we had to work out 70% of it, so I'm going to multiply it by 70 over 100, and the missing figure that we wanted for our water and electricity was 56,000. I'm sure you've calculated that in the meantime, being the good accountants that you are. But remember, 70% of that 80,000 is going to need to be allocated to factory overheads because that's the only part of the water and electricity that actually was used in the factory. Okay, let's look at the next piece of information that we have. And we've been given now our indirect material. F says indirect material purchased was 56,000 Rand. And then it tells us that stocks are on hand at the end of each year. But don't worry, we've taken that into account already by taking our opening stock and our closing stock. So we don't actually need to use that information now. And then they tell us that 80% of the indirect material were used in the factory and the rest was used in the office. So we're going to apply the same principle that we applied in the previous adjustment or the previous transaction. We are told that 80% of the indirect materials are used in the factory, and we only care about the factory costs here because we're doing factory overheads, remember? We're not doing the adjustments for the income statement or for the statement of financial position of this manufacturing company, only dealing with the factory overheads. So the amount that has to go in here is the indirect material purchased of 56,000. And remember, before the break, we already set up our little indirect material account here, and we said 72% plus whatever we purchased minus 7,500, and that was the 56,000 that we've just read in that adjustment that is now being purchased. So we're going to put it in there. But that's not the end of our calculation, because the question tells us that we didn't use all that in the factory. It tells us that only 80% of the indirect materials were used in the factory. So once we've got that answer, we still have to work out 80% of it. So let's go back there and just make sure that we've got our calculation right. I'm just going to put times 80%, and that should really be outside the bracket. You are allowed to write, you're allowed to erase and change the answers. So I'm going to work out 80% of this figure here. Let's do the calculation. It's going to, let's first work out the bits in brackets. It's going to be 7,200. That's what we started with, plus the 56,000 that we purchased, minus the 7,500 that was on hand at the end of the year. That gives you a total of 55,700. And then I'm going to multiply this by 80% times 80 over 100, and that's going to give me the answer that I want of 44560. Let's write it in, 44560. Once again, I just want to stress something very important in exam technique. This was a figure that we needed to calculate using 1, 2, 3, 4 other figures, which means it would be out of 4 marks at least. Please don't just type this into your calculator without showing the calculation in brackets, because if you type in something wrong in the calculator, you're going to get 0, but if the examiner can see that you've worked it out correctly and that it was a calculator mistake, you're going to get some part marks for doing your calculation in brackets. Remember, brackets are your friends, use them, make sure that you include them in your statements. Okay, let's look at the next piece of information. We're now on G. G tells us that depreciation was written off. And depreciation, I know, always makes people think of asset disposal and having to calculate it. The good news here is that they're not asking us to calculate it. They've given us the figures. They've given us the depreciation on office equipment was 9,500, and they've given us the depreciation on factory machinery of 12,800. Again, the same principle applies. We only include in our factory overhead note the note or the information that belongs to the factory. So we can completely disregard and ignore the office equipment, and the only figure we're going to put in for our yearly depreciation is our 12,800 Rand that belongs to the factory. So let's go back to our production cost statement and to the note on factory overheads. The answer is simply going to be depreciation, and the figure was 12,800 Rand, I think. Let's just check it. 12,800 Rand. There it is. Okay, now we've got another calculation to do. This is a calculation that deals with sundry expenses. And it tells us that sundry expenses paid were 21,000 Rand. So sundry expenses are all your small expenses that you don't really want to categorize as separate items. You just throw them all together as sundry expenses. And it tells you that this must be allocated according to the floor space used. So they say the ratio of the space used by the factory, office, and sales department is 4:2:1. So there are 3 components of this business. There's the factory, the office, and the sales department, and each of them uses a certain ratio of the available floor space. So what they've told us is that the factory, because that's the first one that's mentioned, it's the first one in the ratio, the factory uses 4, the office uses 2, and the sales department uses 1. So the factory is the biggest part of this business. And we have to allocate this 21,000, we have to split it according to that ratio. So the way we do that is we count how many parts there are. There were 4 parts, 2 parts, and 1 part. 4 plus 2 plus 1 gives you an answer of 7 parts in total. Okay, so there's 7 parts in total, of which 4 parts must go to the factory. So we're going to multiply this 21,000 times by the 4 parts that go to the factory out of the 7 parts that there are. And that's going to give us the sundry expenses that must be allocated to the factory. Easy calculation if you understand your ratios. Always just add them all together to find out how many parts there are and then multiply by the part you want. It's again one of those want over have calculations. So let's do that. We're going to put in our production cost statement the figure for sundry expenses. And that calculation is going to be 4 out of 7. Let's just write that a bit more neatly. 4 over 7 times by 21,000 Rand. And let's do the calculation on the calculator. 4 over 7 times by 21,000 Rand. And the answer comes to 12,000 Rand. And that is the figure that we're going to include in our sundry factory expenses. Almost done. We've got one more adjustment to do, which is quite a long one. And this is the one that deals with our salaries and our wages. So the first thing that we need to do is look at which wages have been paid to the cleaner. And they've told us that the cleaner earns 46,000 Rand per year. And it says that she spends 50% of her time in cleaning the factory. So once again, we're going to have to work out the 50% and allocate it to the factory, and that should be quite easy. We're going to take 50% of 46,000, and we know that the cleaner's wages, those 23,000, are going to be allocated to the factory. Now the important thing is, are those going to be included as direct labor, or are they going to be included as indirect labor? Because if they're included in direct labor, we're going to have to put it over here as our direct labor costs in the face of the production cost statement. But if they're included as indirect labor, we're going to have to put it up here in the factory overheads note. That's why it's so important to understand the difference between the two. Because this person is a cleaner, she doesn't spend her time making the products, she spends her time cleaning up after the people who've made the products. So she's going to count as an indirect laborer, and we should put that 23,000 Rand over here. Please make sure that you understand the difference between direct and indirect, because you do not want to put that in the wrong place. So I'll leave that 23,000 there for now. Let's see who the next worker is. The next worker here is also in the factory. They say 3 factory workers were employed. They each work 1,600 hours normal time during the year. 1,600 hours. That's a lot of time. If you study that amount of time for your accounting exam, you're absolutely going to ace it. And they earn a wage of 40 Rand per hour. They also each worked 300 hours overtime. So 1,600 normal hours plus 300 hours overtime. And they did that at a rate of 50% more than the normal rate. Those of you that study business economics or business studies will know that by law you're supposed to pay 50% extra. So this business is getting 1,600 hours at 40 Rand, plus another 300 hours at 50% more than the normal rate. So to work that one out, if the normal rate is 40 Rand per hour, remember the question told us that the normal rate is 40 Rand per hour, it's over here. So the 40 Rand per hour times by 150 over 100, remember we do that to increase, to find out what a 50% increase is 60 Rand. So the normal rate is going to be 40 Rand per hour, and the overtime rate is going to be 60 Rand per hour. So these workers are working quite hard, and we need to work out how much they are actually earning. So there's quite a long sum here. There are 3 factory workers that are employed, and each of them has worked 1,600 hours, and that's been 40 Rand per hour. So they're getting 1,600 hours times 40 Rand per hour, and then all of them have also worked at, all 3 workers have worked at 60 Rand per hour for another 300 hours. So if we do this little sum that I've written on the left-hand side here, we're going to get the wages of those workers. So let's do it quickly. We're going to take our 3 workers, each working for 1,600 hours, times by 40 Rand per hour. Gives me one part of the calculation, 192,000. And then the overtime is another 3 workers, each working at 60 Rand per hour for another 300 hours. So the total wages that these workers are going to earn in total is 246,000 Rand. And we need to again think about where we're going to put it in the production cost statement. Is it a direct cost or is it an indirect cost? Because it tells you factory workers, these are the people who are actually making the product. So we need to include them as direct labor. So if we go back to our production cost statement, that figure that I've just had is going to not be shown in our factory overhead costs, because remember those are only for indirect laborers. We're going to show it down here as our direct labor cost, and you should really rewrite the calculation that I've done, but just to save some time I'll just put the answer of 246,000 Rand in here. Okay, so there's one final adjustment over here which deals with various factory foremen and also deals with the salaries paid to the production, to the office assistant. What I want you to do is try and finish this question yourself. See what you have to do with the salary of the factory foreman, who's been paid a total of 89050. See where you think that has to go, and also see where you think the salary of the office assistant has to go. I'll give you a clue. Anything to do with the office We know what we did with the various other office items. We actually just ignored them completely because we're doing costs for the factory. So that's really the last adjustment that you have to do. And then it's actually told us the final answer in J. It tells us the cost of production of chocolates for the year is 1,212,000 rand. That's a lot of chocolates, R1,000,000 worth of chocolates. So that cost of production, we know, is our final answer at the bottom of the production cost statement, our total cost of production, 1,212,000 rand. So you're going to fill in all of the answers to these questions, close all the brackets and add it all up, and then you're going to work backwards to calculate this missing question mark, which was our work in progress at the end of the year.
Okay guys, I hope you're enjoying this revision session. If you are struggling and need help, please post on the page or send your questions to the Learn Extra Help Desk. The links are on our Facebook page. But now it's time to take a very quick break. Don't go away, we'll be right back. Welcome back from the break, guys. Doing revision is really important, so I hope you are enjoying this lesson. I'd love to chat to you on our Facebook page or on Twitter, so please let us know how you are doing. Enough of the chat, now it's time to get back to some more revision. We've come to the end of today's show. Thanks for joining me and for chatting to me during the show. Please visit our website, learn.mindset.co.za, to get the notes and to watch the videos from earlier in the year. And remember, we are here to get you through the year, so stay connected. Goodbye.